Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets brought to you by the FTX app. Links available in the description below for all your mobile trading and portfolio tracking needs. Let's talk about BTC USD and the developments from last week's video. We'll keep it brief because I think there are two structures that are relevant. The first is still this 200-week moving average, which we've said has historically been relevant support, and now we can look at it in the context of the most recent weekly close. And then just like last week, we will overlay the most recent range high and see what the current price action is telling us within that context, right? If I remember correctly, we had this kind of cluster as our range high. So as a final kind of reminder, last week the market looked a bit odd because Ethereum had broken out and that looked good, but Bitcoin was lagging behind. And the argument I made was I wanted Bitcoin to catch up in order for both of those assets, both the majors, to look good on high time frames. Then you could have a few weeks on risk on. That looks to be threatened at the moment, and that's for a couple of reasons. First is on the weekly time frame. If you look at price relative to the 200-week moving average, it looks like it broke it on this candle and then came in, retested it on the last weekly close. So that's still resistance, right? I think that's about as straightforward as it can get. The 200-week moving average is still resistance, and the criterion that I've had for some time now, which should be a weekly close above it, which would also signal strength from 20k, has not yet materialized. So on the weekly time frame, still no evidence of absorption at this structure. You kind of have a very tight range between people buying dips below 20k and this very overhead mean reversion resistance at 23k or thereabouts. That is still a resistance structure. Now it's on the daily time frame where some of the more kind of troubling developments have come to place. One way we can look at this is actually by looking at the range that formed as the apex of this selling took place, and we can do so in the following manner. If we take our highest close as our resistance structure, lowest close as our support structure, you can see price relative to the range here. And what the current price action is indicating, unfortunately, is a failed breakout type of pattern, right? You can see quite clear resistance. It doesn't exactly matter how you delineate that type of level. I use the highest close and lowest close. I think it gives a very nice midpoint as well. And also we know that this is aligned with the 200-week moving average, which is why I preferred it for the confluence. In any case, if you look at the most recent price action, this is starting to look like a failed breakout. And the reason is momentum slowed down almost immediately after the market poked above the range. Since then, it's been slow bleed. And you can see in the yesterday, it closed back within the range, and most of the price action today is below the range high as well. Now, as you know, failed breakout patterns are generally bearish. This is the excess at the range high. You're assuming the market closes back below the range high again. Your targets tend to be the range mean or the range midpoint as the first trouble area, and then the range low after that, right? In any case, the overarching premise is the market is consolidating. It tries one side. If one side doesn't work, it usually makes its way towards the other side, or at the very least extends the consolidation, right? In any case, that's just a lot of squiggling to say that on higher time frames, just to say the daily on the weekly, we've got weekly resistance in the form of the 200-week moving average and a daily failed breakout in the form of a close below 22.5. So if you want to fix either of those, the market kind of has to reaccept above the range high. I think that would be a pretty decent signal as far as, in general, when you get a failed breakout and the market trades lower, if it eventually comes back up to where that failed breakout signal took place, it's very unlikely that it happens a second time, and that tends to be a good continuation pattern, right? But for the time being, in terms of what's available to us, assuming this daily close doesn't get rescued or turn into something good, closing below 22.5 daily is bad because it's A, 200-week moving average on the weekly time frame still resistance, B, daily failed range breakout, which sets the baseline expectation of trading towards the range midpoint, if not the range low as well. And again, invalidation wise, what would start to shift that higher time frame picture? If you're being patient, weekly above 200-week moving average, daily reclaim the range high post fake out, wherever that may happen, right? But for the moment, BTC USD not accepted above the range high and looks like a failed breakout and an undecided retest of the 200-week until proven otherwise. That's, I think, really the main focus of this video. I mean, ETH down more. Slightly weirder structure on ETH, to be completely honest with you. Like on the weekly time frame, I thought it might push slightly higher instead of, testing these wicks more into the candle bodies. It could still do. That's not entirely clear to me. Even on the daily chart, if you just kind of eye test where the market traded into, I think this consolidation that's slightly higher up, the last low pre-break or the pre-breakdown range of 1.7 is a much nicer level than wherever the market's slowing down here. And you can see you've got a bit of a messy consolidation going on at the moment. I think any, especially with Bitcoin forming a failed range breakdown, I think if this kind of closes as a swing fail into an engulfing daily close lower, you have to consider price filling in much of the progress that was made over the last few days and trading back closer to its Bitcoin style consolidation. Right, far less clear on ETH. I think the clearer reads will come from either trading into resistance or a clear breakdown in this structure. For the time being, I'm not hugely fond of this consolidation. I think the better levels are below us, the range it came from, or above us, the range it broke down from, right? So 1 and 2 are much better structures than wherever the market is here. And I think Bitcoin is clearer in that regard as well. And if we look at ETH BTC for some confluence, down 3% today, if I recall correctly, it was trading above its range midpoint, somewhere in this area here. So, pulling back to 0.06 or thereabouts, kind of interim support there. But I really think, for me, being completely frank, the honest focus is BTC USD failed breakout. I need that to shift or to fix or do something else, because otherwise it just looks like a daily bearish pattern as part of a weekly bearish retest, and that's just not very good. It's also a headline heavy week, so if I jump over here, you can kind of see from our friend DB, you have Google earnings, Microsoft earnings, that's on Tuesday, so tomorrow. There's Fed decision on Wednesday with Facebook earnings and the presser as well for the Fed rate decision. Some GDP data, which could potentially formally indicate a recession in the US. That's on Thursday, alongside some big earnings from Amazon, Apple, and PCE data later in the week. Completely stacked kind of headline week. So if I want to take risk, especially risk on from a technical point of view, the setup better be there. And I know I sound like a broken record, but to my credit, I've been sounding like a broken record since 40s, 50s, or whatever else. I need a setup, and thus far the setups haven't triggered, or at the very least haven't played out. And it looks like we've got a lot of sort of headline volatility risk to look forward to, or in my case, avoid during the coming week. I hope that's clear. I hope that makes sense. As always, thank you for your comments on these videos. I do read all of them, and I appreciate that the short format is popular. Thank you to FTX for supporting the show. Support them because they support us. Get the mobile trading app, track your portfolio. If you haven't, links available in the description below. That's all from me. Take care. Thank you for watching, and see you on Wednesday. I might be covering the Ducks slot as he's off frolicking with his lovely girlfriend. That's all from me. Take care and goodbye.